Hello everyone, I, Ms. Bhavana Danesh Munod, welcome you all in Agricultural Development Trust, Shardabai Pawar, Mahila Arts, Commerce and Science College, Sharda Nagar, Baramati. Good day dear students. Now last period children we studied about a savings bank, investment bank, specialized banks. Also we studied about exim banks. See there are many other banks like we have Industrial Development Bank of India, IDBI, we have Unit Trust of India. So there are various examples of cooperative banks, exim banks. Now we come to our next point in this chapter children regarding SIDBI. We all are familiar to this SIDBI and NABARD as we have studied in 11th standard related to Small Industrials Development Bank of India, that is SIDBI. So this SIDBI, that is Small Industries Development Bank of India, was set up in 2nd April 1990 under the Act of Indian Parliament. So this act as the principal financial institution for promotion, development, and which development? Micro, small and medium enterprises children, that is MSME sector, as well as for coordination of functions of institutions engaged in similar activities. So SIDBI we all know, that is Small Industrial Development Bank of India. It was established on 2nd April 1990 under the Act of Indian Parliament children, who provides financial institution for promoting, giving finance for promotion, development of which enterprises? MSME, that is micro, small, medium enterprises. So to encourage this, SIDBI was established children. Now the next bank children is NABARD. If you can see over here, see NABARD, National Bank for Agricultural and Rural Development, specially established for rural people and agricultural development. Which bank children? NABARD. So this NABARD, it is an accepted institution for financing say agricultural and rural sector. So NABARD provides both short term and long term credit through RRB children, regional rural banks. So it is concerned with policy planning and operations relating to agricultural credit and credit for other activities in rural India children. So it provides finance to financial institutions and not to the individuals. Keep in mind, NABARD, we all know, especially it is for development of agricultural development as well as rural area. But it will not give loan individual to a person. It will give loan to financial institutions children. Which financial institutions? Those are formed in private, especially to give loans, to lend money to poor people. So NABARD will provide funds to them and afterwards they will provide to rural areas. So it is an apex institution children. NABARD is an apex institution which will provide what? Both short term, long term credit to which bank children? Regional rural banks. We have studied RRB, especially to provide loans to farmers and poor people. So it is concerned with policy planning, they have told, and operations relating to agricultural credit and credit for other activities in rural India. So NABARD provides finance to financial institutions and not to the individuals children. If you can see the logo over here, can see the logo of NABARD as well as SIDBI children, banks. So children, we studied all these types of banks, yes or no? So we have studied related to central bank, commercial bank what it is, cooperative bank we have studied. In that cooperative bank we have studied primary, district and state cooperative banks. Development banks we studied children. Even we studied about exchange bank, foreign exchange bank, regional RRBs, savings bank, investment bank. So various types of banks have been studied by us. That is specialized bank is there, investment banks is there, savings banks are there, RRB is there, exchange bank is there, development bank is there, cooperative bank, commercial bank. So these types of banks we studied in this chapter. Now we'll study the next point children in this chapter, that is new models of banking. So new models of banking, in that the first point is small finance banks children. Now what is this small finance banks? We will see. Small finance banks, they have told, is a type of Nikkei banks in India. That means what? It provides a small finance bank license And it also provides basic banking services, children, to accept deposit and to lend money. That means it is a Nikkei, means what? Small type of license banks say. It has a finance bank license which will provide deposit, accepting deposit and lending the money. So aim behind this small finance bank is what? To provide financial inclusion to sections of the economy not being served by other banks, such as say small business unit, small and marginal farmers are there, micro small industries are there, unorganized sector entities are there. So these small finance banks, what are they? Their aim is to provide financial inclusion to economic sections. Various economic sections are there. To that money will be provided, and it will be served by other banks. Which bank will be connected with this small finance banks? That is unorganized sector, micro and small industries will be there, small business units will be there, marginal will be there. But the small finance banks will be connected to existing non-banking financial corporations, NFBFC, MFI, that is microfinance institutions, LAB, that is local area banks, children. This can apply to become small finance banks, and this can be promoted either by individuals, corporate, trust or societies. So very nice work this small finance bank do, children. So it will not work say like NABARD, SIDBI, not on a major area. But the thing is, they will have a license to give money, deposit money and lend money. And the thing, children, which will help this small bank or which can be working as small finance bank is, children, NBFC, children. If you can see, non-banking financial companies, microfinance institutions and local area banks, that is LAB. So this can become small finance bank, and this can be promoted either by individuals, corporate, trust or societies. Now we'll see when the bank was established. So it is established as a public limited company in the private sector, children, under the Companies Act 1956. Also it is governed by the provisions of Reserve Bank of India. See, whatever rules and regulations will be there, it will be working under them. So what is the bank? Small finance bank will work under the rules and regulations of RBI Act, then 1934, then Banking Regulation Act 1949 is there, but there will be no territorial restrictions for this bank. Means territories restrictions will not be there. Like suppose I am in Pune, that bank will be not working for say abroad, say Mumbai, say Dehradun, no territory restrictions. It can work for any place. Small finance bank, that is called as territorial restrictions, children. As well as these banks, they were set up with the twin objectives of providing an institutional mechanism for promoting rural and semi-urban savings, and also for providing credit for viable economic activities in the local areas. So these banks are specially set up say with both objectives. Twin objectives means what? Both objectives. What are the both objectives, children, over here of these banks? Providing an institutional mechanism to promote rural as well as semi-urban areas. For what? Savings. As well as they can provide credit for economic activities in the local areas. Means they will not only work for rural, say semi-urban areas, they will also work for local areas, children, to provide, promote rural semi-urban areas, also to encourage people to use credit facilities, providing credit for them. So this was related to what, children? Small finance banks. Now we'll come to see objectives of small finance banks, children. What were the main objectives? Whose small finance banks? So objectives of small finance bank, the first one is provision of savings for unserved and underserved sections of the population, and supply of credit to small business units, small marginal farmers, micro small industries and other unorganized sector, children. See what are the objectives of small finance bank? Provision of savings means more and more people can do savings. Encourage them for savings. Whoever, whatever population will be there, that is under deserved sections of the population. So that provision should be there. Then the second point was children, supply of credit to small business units, small and marginal farmers, micro and small industries and other unorganized sector. Means encourage people to use credit facilities also, supply credit facilities. So whose objectives these were? Related to small finance banks. Now they have given examples in your textbook related to small finance bank. If you can see, Jana Small Finance Bank is there, AU Small Finance Bank is there, and Equitas Small Finance Bank is there, etc. So these banks are made to what? Promote savings for rural, semi-urban areas, then also in local areas, also make people to use more and more credit to small business, small and marginal farmers, micro and small industries and other unorganized sector. So it will be Jana Small Finance Bank, example they have given. Now the second type of bank we are studying children, this is according to the new modern structure. They have told which banks are there more now. So the second bank in this new modern structure children is payment bank. If you can see, payment bank. So what is payment bank? It is a new model of banking children. It is conceptualized, means the idea, conceptualized means the idea was by the Reserve Bank of India. The main aim is to offer financial services to small businessmen and low income people. See, the main aim of payment bank is what? To offer financial services, to provide finance to whom? To small businesses and low income people. So it is like any other bank, as it can carry out most of the banking functions such as remittance services, mobile banking, ATM cards, net banking, etc. So see, this type of modern services is given by payment bank. ATM cards are there, mobile banking is there, remittance services is there, net banking is there. But it is not allowed. Now this payment bank children is not allowed to issue loans, C and credit cards. Not allowed for them. Which bank? Payment bank. They cannot issue loans. They cannot have credit cards. Similarly, it can accept the demand deposit, DD, up to rupees 1 lakh children. So, Indian Post Payment Bank, Airtel Payment Bank, Paytime Payment Bank, etc. They have given the examples of active payment banks to the date. So, can you see the symbol of bank children? The facility this payment bank is given, that it can give DD, demand draft, up to 1 lakh rupees, but it cannot give credit cards. Also, it cannot provide loans. Only the main aim is this can carry out modern functions regarding using of mobile banking is there, ATM cards is there, net banking is there. So this service is provided by which bank children? The second type of bank in modern functioning is payment bank. So this we studied under which function? New models of banking, that is small finance bank we have studied children, and we have studied about payment bank. Now we come to our next point in the chapter children, that is functions of commercial bank, and that is also an important point for you. For long answers they can ask explain functions of commercial banks. Keep in mind for long answer. So this will be more important. We will study now functions of commercial bank. The first function is primary function children. Then in that primary function the first part is accepting deposit. The first primary function of commercial bank is what? Accepting deposits. We all know accepting deposit. So the primary functions of commercial banks is also known as core banking function children, core. And then the first function in that is accepting deposits. You all know accepting deposit from public, accepting their money. So commercial banks collect deposits from individuals and organizations, and then that deposit is classified into two types, time deposit and demand deposit. Keep in mind children, what we are studying now, the first primary function, accepting deposit. Accepting deposit means we are collecting money from individuals or organizations. Then that accepting deposit is again divided into children, time deposit and demand deposit. Now under that time deposit again we have various types of deposits we will see. The time deposit will be referred to time. It is called as time deposit because they are repaid to the customers after the expiry of decided time, children. Time deposit means after your certain amount. Say, for example, I'll give you 1 lakh rupees you have given on month of June for 2020 as an FD to the bank. So next year 2021 same date June your FD will be renewed, means time will be there, time period 1 year completed. So you have to go to the bank and tell them whether you will deposit or withdraw the money or you again want to renew your FD. That is called as time deposit. According to the time, they will tell you whatever expiry is there, the bank will inform you. Then under that time deposit, the first one, children, we have fixed deposit, FD. Keep in mind fixed deposit. So fixed deposit, you all know, you are familiar to this. Fixed deposit account is an account where fixed amount is kept for fixed period of time, bearing fixed interest rate. So rate of interest is more as compared to saving bank account, as well as it will change according to the deposit. Varies means what, children? Change according to the deposit period. 1 year they will have this rate of interest, next year they can have different. So this fixed deposit will have higher rate of interest, children, rather than savings, they have told. And normally withdrawal of amount is not permitted before maturity, means after your expiry of 1 year only, then you can withdraw the cash, children, from fixed deposit. So however, depositor can withdraw amount before maturity date for which bank will reduce the interest rate. If in case in emergency a person wants to remove money before the expiry, then bank will not give him interest rate, he will cut down the interest rate. So for amount deposited in this account, a fixed deposit receipt, FDR, is required, children. It is issued by a bank and we have to keep it safe. Keep in mind, receipt, whatever amount you have deposited in bank, FDR receipt is very important. Be careful that document you keep safe, as it will be requiring proof when you want to remove your money. So this is issued by the bank when you deposit money to them, and against this receipt loan, you can take the money back. So withdrawal of amount will not be permitted before maturity, means before time you cannot get money. However, they have told depositor can withdraw amount before maturity date for bank. For that purpose, bank will reduce the interest rate, and a fixed deposit receipt will be issued by the bank. So against this receipt, children, you have to take your money back. So that receipt is very important. But before maturity, if you want to remove the money, then the bank, what way will do? They will give you less rate of interest. Now we studied about time deposit. Under the time deposit, the first one was FD, that is fixed deposit, children. Now under that time deposit only, the second one is recurring deposit. First we studied about FD, fixed deposit, then we are studying about recurring deposit. Now recurring deposit is operated by salary people, children, salaried persons or businessmen which have regular income. So this certain fixed sum of money, RD, recurring deposit is specially called as RD, children. So there is a certain fixed sum of money deposited into the account every month, and withdrawal of accumulated amount along with interest is paid after the maturity date. Rate of interest is also high for RD, children, which will be similar to fixed deposit amount. Both will be having same rate or little bit difference in that. And separate passbook will be provided to you by the bank for RD account. See, keep in mind, for FD what we will get, children? Fixed deposit receipt. And for recurring deposit you are getting what? A check that your amount has been deposited over here. So this recurring deposit, children, is specially for salaried people or employee, businessmen say, who will get salary regularly, monthly income they are getting. So they can deposit, create an RD account every month, children. They will deposit some amount of money on that. Bank will give them rate of interest which will be same as fixed deposit and but higher from savings. So bank will also give you a separate passbook for recurring deposit. So under time deposit what we have studied? Fixed deposit and recurring deposit. Then the next type of deposit, children, is demand deposit. See, if you can see over here, demand deposit. Now demand deposit is what, children? Which are repaid to customers whenever they demand. That means money can be withdrawn as per wish of the customer, say by withdrawal, by slips, checks, ATM cards, or online transfer. That is called as demand deposit. Time deposit is fixed. After the maturity of period only you can remove the money. But demand deposit means what, children? Anytime if you want to remove your money from the account, it is possible. By which way? Demand deposits. So you can either remove through check, you can either remove through ATM card, or you can have online transactions according to which you want. That is called as demand deposits. Now under that demand deposits we have savings account. So savings account, children, is generally operated by those who earn regular or fixed income such as salary or wages. And the main aim of this deposit account is to encourage habit of savings among the people. So these deposit account, children, are meant for the purpose of maximum savings. There are restrictions on withdrawal limits from these accounts. These accounts, say, carry low rate of interest, or say they are credited, interest is credited monthly, quarterly, half yearly, or in yearly basis on this account. So passbook facility, balance on SMS, account statement, etc. These facilities are provided by saving account, children, account holders. So to ascertain financial position, and for this saving account holders banks provide separate facility for flexi deposit, means flexible it is. So these facility combines advantages of saving account and fixed deposit account. This is not a separate deposit account, children, they have told. It is a type of saving bank account or current deposit account with special features and benefits, children. So in case of multiple option deposit account, the excess amount after a particular limit gets automatically transferred to fixed deposit. So when advocate funds are not available to honor payments. So now we are studying what, children, regarding demand deposits. Under this demand deposits, saving account is there. That saving account, keep in mind, is usually where we can remove any time money from savings account. It is not dependent on a time period. So money savings will be there, as well as interest will be low in savings account. So they will give us monthly or quarterly, half yearly or yearly interest rate. But the passbook facility will be given by the bank, children. So savings account can be held by, say, account holders. The banks provide them separate facility for savings account holder. There will be no separate deposit account for this. So it is a type of saving bank account, say current deposit also a type of, which have special features and benefit, children, savings account. So in case you have multiple deposit money in your saving account, children, that time immediately some amount of your money can be fixed deposited by the bank. It can be transferred into fixed deposit, whatever savings account. If it is going beyond the limit of that particular account, then bank will transact that money into FD. Whenever advocate finances there in savings account. So this facility is provided by the bank, children, in savings account. So funds also can be transferred from fixed deposit to savings bank account. Means whenever you require, you don't want fixed deposit account, you want it to transfer again into savings bank account, this process can be done with the help of bank, children, bank savings account. So this is one type of account in demand deposit, children. Anytime you can withdraw the money. That is one type of account, savings account, say, but rate of interest is very low as compared to recurring deposit and fixed deposit, FD and RD. So next period we will study about the current account, children. Till then, bye and thank you.